When money's getting made, they're making a lot of money. And when the losses are getting made, they're making bad losses too. Hey everyone, welcome back to my channel. So as you can tell by the title, I'm doing an oil tanker update today. So I've got all the results from Q3 2021, and we'll go through DHT, Euronav, and TNK tankers. There's been a little bit of a development in this thesis, so it'll be interesting to check that out. Firstly, I'd like to thank everyone who has supported the Movember cause. It has been a fairly entertaining process to grow this mustache with some other YouTubers as well. As you've probably seen, we've done some collaborations and things like that over the month, but it's been a lot of fun and for a really good cause. And look, there's still a couple of days left if you'd like to contribute, and I'd love to thank you personally if you do. The link's in the description and you can go ahead and do that as you feel like it. All right, so the highlight of today is that there are some positive signs returning to this thesis. So we'll go through TK tankers, DHT, and Euronav, like I said before. I'll go through a bit of an outlook of what's going on here in the thesis, and then I'll still go over my plan at the end. So my plan really hasn't changed, but it's good to revisit that every 3 months anyway. So the big thing I got out of what all the CEOs were saying out of their Q3 earnings reports was that there's just a lot of positive talk and enthusiasm coming out because of oil demand and consumption rates and things like that. They're expecting 100 million barrels per day of consumption levels to arrive in December, which would be back to the pre-pandemic levels. That's 100 million barrels per day in world consumption. And it looks like it's about to happen in December. Now, it hasn't translated this positive attitude and this increase of demand. It hasn't translated over to the VLC spot rates. Well, not dramatically yet. We'll see that it has improved it a little bit though. The problem is that developing economies still need to catch up in vaccination rates, which is just slowing everyone down, and the world can't quite get back on its feet yet because, look, I'm in Ukraine. I think the vaccination rate here is probably like 10%, maybe less. Like, it's awful. Whereas my family who's in Australia said the vaccination rate's well above 80%. That's a big discrepancy. So I can imagine throughout the world, this discrepancy still exists until countries like Ukraine and Russia and places like that catch up for everybody else. We're going to still have demand for oil not as strong because people are still having to quarantine and do lockdowns and all that type of stuff. Okay, there are just also many other things that can still impact this market. So there's a China energy crisis at the moment where you might not be familiar with this, but I've done a little bit of reading, and China and Australia are having a bit of they're having some issues politically, and imports and exports have been hurt, and coal in particular. So China needs Australian coal to fuel. China's 60% reliant on coal for their energy needs, and they've pretty much stopped coal going from Australia into China, who's their biggest coal importer. So they're having rolling blackouts through China. There's energy problems over there, which might be good for oil because they might have to turn to oil to replace the coal as for energy, but it also, look, there's political issues here as well, and there's a resurgent COVID cases throughout the world as well in certain pockets. So there's still lots of things that can impact this market. So I'm not thinking that it's guaranteed to happen. I think it's a lot of speculation, thinking that the world's going to return to normal quickly. It's a bit of that speculation, and I don't really want to base my investing on that speculation, but the trend is going the right direction by the looks of things. Now, as you can see by this graph here, you can see spot rates have just come up in October. They were very low from about May to September. It was a terrible time in the spot rate market from a strong sort of start of the year. So it's good signs, and that's why the stocks have sort of, they've increased in value quite a lot. But like I said, there's still a lot of things that can go wrong here. But I think Kevin McKay at TNK Tankers summed it up pretty well. I'm going to read this out, but please just read it here on the screen as well. So he said, the tanker market has seen a period of exceptionally low spot rates in 2021 to date. However, the tanker market is experiencing an improvement at the start of the fourth quarter and increasing trade volumes, coupled with a potential oil demand boost due to the global energy crunch and seasonal weather delays, could support rates further over the winter months. Looking further ahead, tanker supply and demand fundamentals continue to trend in a positive direction, which should lead to higher tanker fleet utilization and improved tanker rates in the future. Essentially, this is what all the CEOs were saying. So I think that was a good summary there by Kevin McKay. So speaking of Kevin McKay, let's turn to TNK results now for Q3. So the book value actually went down from 929 million down to 877 million. That's down by 5%. Free cash flow loss was about 25 million for the quarter. It was about a $30 million profit this time last year. Look, Q3 was ugly. Q4 possibly looking a little bit better, but it's probably still going to be pretty weak. I don't think they're going to make a profit in Q4. TNK were able to refinance some of their debt, luckily, which has helped them make smaller repayments in the shorter term while this difficult period they're going through this difficult period. Like I said, it's still going to be a tough remainder of this year, Q4. Although looking more positive, I think it's going to be touch and go whether they make a profit in Q4. But 2022 is looking far better at this stage, but it is early days. Now let's turn to DHT for their results. Now, they had a loss of $21 million for the quarter. Their book value was down about 5%. The Q4, the outlook is looking okay, but a bit like TNK, it's probably going to be loss-making. DHT really have been preparing all year essentially for 2022 because they've been scheduling all their dry dockings, which means like the servicing of their boats and things like that, which means 2022, they shouldn't have to service any of their fleet, which means it can be fully operational at like maximum capacity. So when the rates improve, they've got, they can fully utilize their fleet essentially. So I think that's a good move while the rates are low, but it means that they're making a loss because of that. But I think I would do the same thing in the same situation. They were able to buy back a little under 1% of their shares outstanding in the quarter, which is interesting because they made a loss. So I don't know why they did that, but I think they just thought the share price was just really undervalued and it was good use of, maybe they had, I don't know, maybe they borrowed some money and were able to do this. I don't exactly know why they did that, but it doesn't make sense to me exactly, but yeah, it's an interesting little point there. And DHT also said it's going to be a tough remainder of the year, and they're slowly seeing signs of a return to some sort of normal conditions. Now quickly, let me just mention Interactive Brokers because that's the brokerage account that I use. There's a link in the description if you want to try a demo account and see if you like it. I've got videos explaining how to use the account as well. So go back and check those out if you want to let me help you like hold your hand and walk through how it all works. Look, I think Interactive Brokers is fantastic. They have low exchange rate fees. There's no monthly fees anymore, which is fantastic. I think it's one of the safest brokerage companies in the world. It's just the one that I use personally. I think they've done a fantastic job of making sure that your money is safe with them instead of something like Robinhood or Webull or those startup apps that, look, I don't trust the management team who are running those businesses. And I'm going to have a video coming out very soon about what's going on in the brokerage account world, but Interactive Brokers is the pick of them. Okay, now back to the oil tankers. We'll go to Euronav results now for Q3. Now their book value has been down about 13% so far this year. So not just for the quarter, that's since December 31st, 2020. It's about 13% down for the year. They made about $100 million loss for the quarter. Look, tanker market's a wild ride. Look at this little table here. The third quarter last year, the spot rates were $42,000 a day. The third quarter in 2021, the average spot rate was only $9,000 a day for VLCCs. So as you can see, that's like, it's a wild roller coaster and you get these big ups and downs, but that's what actually makes the oil tankers quite kind of attractive is because when money's getting made, they're making a lot of money. And when the losses are getting made, they're making bad losses too. So the best oil tanker companies with the best balance sheets, well, they're the ones that get through these bad periods and really profit on the other side. So here's Hugo de Stoop from Euronav, the CEO. This is what his comments were about what's going on at the moment. So he said, we have every reason to be confident that we have now come through the trough of this particular cycle. The demand for oil transportation is recovering thanks to an improved crude demand as part of post-COVID global economic recovery. Additional demand for fuel oil as energy producers are switching to a cheaper solution and an OPEC plus production growth translating into exports. So we believe this trajectory will be maintained as oil demand continues to recover toward pre-COVID levels of consumption and the robust medium-term tanker market fundamentals gains traction going forward. So Hugo de Stoop of Euronav obviously echoes the feelings of both DHT, TNK in terms of like the medium-term outlook is still very positive and there are things that are starting to line up here in the tanker market. But I still think it's a little bit of speculation. We got to wait for this to actually play out. So as you can see on the next slide, I said, all this positive talk and speculation, will it come true? So this is what I think. Demand for oil looks set to improve to above pre-COVID levels sometime in 2022. I think that's a given. I think that's going to happen. OPEC is going to increase the supply of oil, and I think that's going to happen. Fleet supply fundamentals are very strong for the future because new builds are very expensive with the high steel prices at the moment. Container ship new builds have filled up all the shipyards to 2024. So oil tanker ships, there's not going to be many coming online in the next 3 years. Scrap rates now in Q4 are still very attractive like they were in Q3. So scrap rates mean that if you have a really old ship, you probably are going to get more money scrapping it and selling off the steel than you are by using it to try to transport oil because the rates are low. So you might as well sell the boat and pocket that cash and invest it somewhere else. Now, the order book to fleet ratio is at 25-year lows. That's the order book of new builds and new oil tankers that are going to come into the fleet. As a ratio, that's the lowest it's been in 25 years. And a quarter of the global VLCC and Suezmax fleet is actually now over 15 years old. So 25% of the fleet that's out there is over 15 years old, which means they're going to, over the next few years, start to have to be recycled and have to go off the market. But since the shipyards are full, the replacement of those is probably not likely. So the fundamentals, I think, are still in favor of a positive oil tanker outlook in the medium term. So if you are wanting to learn more about how to read things like balance sheets and cash flow statements and things like that, and it really improve your deep dive skills, I highly recommend going through Hamish HODDER'S Loan by Example course. Use the code Black Friday. You'll get 30% off using my link in the description. Look, if you want to learn about meaning, moat, management, margin of safety, it's the only course that I'd recommend. I don't want to make a course myself now because Hamish's is really good and I think I couldn't have done it any better myself. So I now just recommend Hamish's course for anyone who wants to learn how to do this stuff themselves. So I've got a little quote here. We're all very familiar with give a man a fish, feed him for a day, teach a man to fish and feed him for a lifetime. And that's what I think about learning how to read things like balance sheets and other statements like that. I think that's really important because that skill can translate through investments for the rest of your life. Now, finally, this is my plan for the oil tanker thesis, and I'm just going to keep riding the roller coaster until 2023. Now, I'm only going to sell if one of my favorite companies is at a silly price and I need to load the boat, pardon the pun. Now, I still want to learn a lesson. So I know this oil tanker thesis hasn't played out yet, but I want to give it some time. I want to give it 3 years, and 2023 would be when that 3-year kind of period comes up for me. I'm learning a really good lesson, which is, can I stomach this cyclical nature of this business? I want to know whether I'm a bit of an idiot for investing in a bad cyclical business and I should just be focusing on great businesses like Tencent and Alibaba and Berkshire Hathaway and Markel and the companies that I have most of in my portfolio. But I want to give this thesis a chance, and I want to understand that sentiment and cycles can change. The thesis makes sense to me, and we just need oil demand to return to these pre-COVID levels, and I think we're going to get there. Michael Burry actually doesn't have Scorpio tankers anymore. In the last quarter, he bought Scorpio tankers. Now it looks like he sold Scorpio tankers, but I have no idea why, and I can't keep up with his decision. So that hasn't really affected my idea on this play at all, and it hasn't affected my plan whatsoever. So look, if you have an opinion on this, I'd love to hear about it. I'm very open-minded about whether I'm right or wrong on this idea. And if you want to reach out to me to discuss it further, you can just leave a comment below. I'll try to answer as many as I can. I hope you've enjoyed this video, and I will see you next time.